What is an REIT? A real estate investment trust, REIT, is a corporation that earns recurring income from properties they own and manage. A REIT makes money by collecting rentals, users' fees, toll fees, parking fees, or storage fees from their tenants. To become a REIT, a corporation should meet the requirements under the Real Estate Investment Trust Act of 2009. Republic Act 9856, 1 for the protection of investors. A REIT must satisfy the following criteria along with others stated in the REIT law. Public company listed with the Philippine Stock Exchange, PSE. At least 1,000 public shareholders, with each owning at least 50 shares. Minimum public ownership must be 33% of the REIT's outstanding capital stock. Paid-up capital of at least PHP 300 million. At least 75% of the REIT's deposited property consisting of income-generating real estate assets. An appointed independent fund manager who implements the REIT's investment strategy. An appointed independent property manager who manages the REIT's properties. An independent appraisal company that conducts a full valuation of the REIT's properties at least once a year. How does an REIT work in the Philippines? An overview of the REIT investing process from the establishment of a REIT to when its investors earn money from it. 1. A real estate company creates a REIT corporation. A REIT company starts with a sponsor that provides and transfers income-generating properties into the REIT entity. For example, REIT was incorporated as a real estate company in 2006 by its sponsor, Ayala Land Incorporated. REIT operates 3 commercial buildings in Makati, Ayala North Exchange, McKinley Exchange, and Solaris 1. Meanwhile, Double Dragon is set to transfer its most valuable real estate asset into a REIT, the DD Meridian Park in Pasay City that consists of 7 commercial buildings. 2. The REIT gets listed in the stock market through an IPO. After complying with all the requirements under the REIT law, the real estate company files its REIT listing application with the PSE and the Securities and Exchange Commission, SEC. Once the REIT gets the SEC approval, it can already list its shares in the PSE through an initial public offering, IPO. This means the REIT is selling its shares, which public investors can buy in the stock market. Funds raised from the IPO are used for the REIT company's expansion, i.e., acquiring more properties to increase revenues. 3. Investors get paid as the REIT earns income. When you buy shares of a REIT, you own a portion of its real estate assets. A share of the income generated from that investment is regularly paid back to you as a shareholder in the form of stock, property, or cash dividends. Why should you invest in REIT? Amid the current pandemic, REITs don't seem like a good investment. However, you'll think otherwise if you consider its long-term benefits. 3. 1. Regular earnings through dividends. Under the REIT Act of 2009, REITs must pay at least 90% of their distributable annual income as dividends to their shareholders. Dividend payouts from REITs are guaranteed by the law, unlike when investing in property stocks, example Ayala Land, SM Prime, Mega World, Vista Land, etc., in which companies may or may not decide to give dividends. Investors also earn higher from REITs, with an estimated dividend yield of 4% to 6%, than government bonds and time deposits. Over time, as properties of REITs increase in value, investors can receive higher dividends. These benefits make investing in REITs perfect for earning passive income. More so for OFWs who invest in Philippine REITs, as they're exempted from paying the 10% income tax or withholding tax on dividends for 7 years starting from January 20, 2020. 2. Capital appreciation. Another way to make money from REITs is to buy REIT shares at a low price and then sell them later at a higher price. Considering that the value of properties increases over time, REIT share prices may also grow. This means a high earning potential for REIT shareholders. 3. High liquidity. When you're in urgent need of cash, you can easily sell all or some of your REIT shares through the PSE. Through your broker, you can withdraw funds from the sale of REIT shares. The high liquidity of REIT shares makes investing in REITs ideal for conservative investors who want easy access to their funds. 4. Diversification of assets. Diversifying your investments is an effective strategy for managing risks. Even if you invest in only one REIT, you add multiple income-generating assets to your investment portfolio. REITs invest in a wide range of income-generating assets. Some REITs focus on just one property type, while others operate a combination of different properties. Residential properties, apartments, condos, house and lots, dormitories, etc. Office properties, BPO offices and call centers, commercial offices, government offices, etc. Retail properties, shopping malls, grocery stores, retail shops, etc. Industrial properties, manufacturing plants, warehouses, distribution centers, RD centers, etc. Hospitality properties, hotels, resorts, etc. Infrastructure, highways, railroads, airports, toll plazas, parking areas, cell towers, etc. Healthcare properties, hospitals, clinics, nursing homes, etc. 5. Low price entry. Investing in REITs is a lot less expensive compared to directly buying an actual property, which can cost you at least ₱1,000,000. Only a minimal amount is needed to buy a REIT share. For example, a REIT is priced at PHP 25.60 per share, as of October 9, 2020, with a board lot of 1004. At this price point, you need only PHP 2560 to buy 100 shares of a REIT. 6. Easy way to invest. Real estate investing through direct property purchase involves a lot of work. You have to secure the necessary permits, oversee the property's purchase and construction processes, find tenants, and manage the property's maintenance and repairs, among many other responsibilities. The hassles of being a landlord won't be a problem when you invest in REITs. You simply have to buy and sell REIT shares in the stock market as you would normally do with regular stocks. 7. Transparency. Because REITs are PSE-listed companies, they're required to be transparent when it comes to sharing their company information. Like other types of listed companies, REITs make timely disclosures of their financial performance, share price, investment strategy, and stock information to their shareholders. Such disclosures are made usually by holding an annual stockholders meeting. Other communication channels may be used for transparency purposes. For example, a REIT makes available relevant information to investors through its website. 8. Professional fund management. A REIT has an independent fund manager who's responsible for the investment strategies. REIT investors can rest assured that their funds are professionally managed and that they're investing in quality real estate assets. What are the risks of investing in REITs? REITs offer many advantages to investors, but they also come with investment risks. Before you start investing in REITs, consider its risks to have a more realistic expectation of the returns you'll get. Like stocks, REIT share prices can fluctuate over time. Political instability, economic recession, higher interest rate, and other factors may cause the prices of REIT shares to fall. Depending on the REIT you invest in, if the rental demand for its properties drops, so do the REIT's income and the dividends it will pay you. Some REITs own only the buildings but not the land on which they're built, as in the case of a REIT. Investors of such REITs lose the opportunity of getting higher returns from the appreciation of the land's value. Top REITs in the Philippines at the moment, and check their website for details. 1. A REIT Incorporated or a REIT of Ayala Land. Website is www.areit.com.ph. 2. DDMP REIT Incorporated or DDMPR of Double Dragon. Website is www.ddmpreit.com. 3. Philinvest REIT Corporation or PhilREIT of Philinvest. Website is www.philinvest.com. 4. RL Commercial REIT Incorporated or RCR of Robinson's Land. Website is www.rlcommercialreit.com. 5. REIT Incorporated or MREIT of Mega World. Website is www.mreit.com.ph. How to invest in REITs in the Philippines. When a REIT is selling its shares through an IPO, you can subscribe to the IPO through the PSE Easy online platform. How to participate in an REIT IPO through PSE Easy. Open a trading account with an eligible stockbroker if you don't have one yet.